Good morning. As the sun rises over South Africa's vibrant cities, a new chapter begins for the nation's economy. Today, we're diving into a story of resilience, determination, and renewed optimism for South Africa's economic future, a journey that has captured the attention of the world. On November 14, 2025, S&P Global upgraded South Africa's long-term foreign currency rating, a milestone nearly 2 decades in the making, and a moment that marks a turning point for the country's financial reputation. This isn't just financial jargon. It's a sign that years of hard work, tough decisions, and sweeping reforms are finally paying off for businesses, investors, and ordinary citizens alike. For years, South Africa faced slow growth, rising debt, and instability in state-owned companies. Power shortages, unemployment, and economic uncertainty weighed heavily on communities across the nation. But determined efforts to turn things around, through policy changes, leadership, and collaboration, are now being recognized on the global stage. This upgrade signals to the world that South Africa's economic foundations are strengthening, and that the country is regaining the trust of international markets and investors. A better credit rating means lower borrowing costs for the government and businesses, more investment flowing into the country, and new opportunities for jobs, innovation, and sustainable growth. We'll break down what this upgrade means, why it matters for every South African, and how it could impact daily life, from the cost of living to the prospects for young people entering the workforce. We'll also look at the bold reforms and ongoing challenges that shape this journey, and the work that still lies ahead to ensure lasting progress. This is more than a financial headline. It's a story of progress, hope, and the promise of a brighter future for all South Africans. Join us as we explore how South Africa is charting a new course toward prosperity, and what this new dawn could mean for generations to come. Think of a country's credit rating like your personal credit score. It measures trustworthiness to lenders. For countries, a high rating means borrowing money for infrastructure and services is cheaper and easier. Ratings agencies like S&P, Moody's, and Fitch assess a nation's ability to repay its debts. A strong rating attracts investors and lowers interest rates, freeing up funds for public services. A low rating, or junk status, signals risk, making borrowing expensive and straining the national budget. This can mean less money for schools, hospitals, and roads. That's why a credit rating is more than a letter grade. It shapes a nation's economic future. For South Africa, this upgrade is a crucial step towards stability and growth. Understanding it helps us see how global finance affects daily life. S&P Global has upgraded South Africa's credit rating from BB to BB, a significant move after years of being stuck in junk status. This upgrade is more than just a technical adjustment. It's a signal to the world that South Africa is making real progress in turning its economy around. While the country's rating is still below investment grade, this step forward marks a shift in sentiment and shows that confidence in South Africa's future is growing. Investors and businesses are starting to take notice, and that can have a ripple effect throughout the economy. Imagine the ratings scale as a staircase. South Africa has just climbed one step higher, now sitting 2 notches below the coveted investment grade. Each step up makes it easier and cheaper for the country to borrow money, which can help fund development and create jobs. S&P didn't just upgrade the rating, they also gave South Africa a positive outlook. That's a strong hint that if the government keeps pushing ahead with reforms and maintains fiscal discipline, another upgrade could be on the horizon. This is the first upgrade in nearly 20 years, breaking a long cycle of downgrades and negative headlines. For almost 2 decades, South Africa has battled negative sentiment and skepticism from global markets. Now, it's a formal acknowledgement that the country's economic game plan is starting to pay off. Policymakers, business leaders, and everyday South Africans can take pride in this achievement. The upgrade sends a clear message to investors. Risks are decreasing, and stability is returning. This can attract more foreign investment, boost local business confidence, and ultimately support economic growth. S&P's decision is grounded in hard data. Reforms, improved fiscal discipline, and stronger institutions are making a real difference. The government's efforts to tackle debt, improve governance, and strengthen the economy are being recognized. This isn't just a pat on the back. It's a sign that South Africa is becoming a more predictable and attractive place to do business. Predictability is key for companies looking to invest and expand. In the world of global finance, stability and predictability are invaluable. They help lower borrowing costs, encourage investment, and foster long-term growth. This upgrade marks a turning point for South Africa's economic reputation, opening the door to new opportunities and a brighter financial future. S&P's optimism is rooted in South Africa's improving economic outlook. GDP growth is projected at 1.1% in 2025, more than double the previous year. Growth is expected to average 1.5% annually through 2028, driven by key reforms. Reliable electricity is returning, allowing businesses and factories to operate more efficiently. Improvements in logistics and transport are making exports easier and boosting competitiveness. These changes attract investment and create jobs, fueling a positive cycle. Stronger growth means more hiring, higher incomes, and increased tax revenue for public services. The government can invest more in infrastructure and pay down debt. This economic momentum is a cornerstone of S&P's upgrade decision. It points to a more resilient, self-sustaining future for South Africa. Another reason for the upgrade is South Africa's improved government finances. After years of rising debt, the government is now controlling spending and boosting revenue. S&P notes that South Africa is on track for a primary surplus, spending less than it earns before interest payments. The debt-to-GDP ratio is stabilizing at 77.9%, a crucial turning point. The budget deficit is narrowing, showing real fiscal discipline. Responsible financial management reassures investors and ratings agencies. Higher than expected revenue is another positive sign. This careful approach reduces risk for lenders and lays a solid foundation for growth. Fiscal discipline is key to long-term stability and prosperity. It's a major reason why S&P upgraded South Africa's rating. Eskom, South Africa's troubled power utility, has long been a drag on the economy. Years of load shedding and financial woes hurt businesses and households alike. But recent reforms are turning things around. Eskom is becoming more stable and less of a burden on government finances. S&P highlighted the reduced risk of future bailouts as a key reason for the upgrade. Bringing private power producers into the grid has boosted capacity and competition. Load shedding is less frequent, giving businesses and families much-needed relief. Improved energy security is fueling economic growth and investor confidence. Eskom's progress is a symbol of broader reform momentum in South Africa. Tackling the energy crisis head-on is restoring faith in the country's ability to solve tough problems. To appreciate this upgrade, we need to remember South Africa's journey. The country lost its investment-grade rating in 2017 after political turmoil and policy instability. Downgrades made borrowing more expensive and recovery harder. Years of struggle followed, with high unemployment, inequality, and the COVID-19 pandemic adding pressure. The 2025 upgrade marks a clear break from that difficult past. It's driven by stronger institutions, a clear reform agenda, and disciplined fiscal management. South Africa is showing it has learned from past mistakes and is building a more stable future. S&P's positive outlook suggests this is the start of a sustainable recovery. What does a credit rating upgrade mean for ordinary South Africans? First, it lowers government borrowing costs, freeing up money for schools, hospitals, and infrastructure. Savings on interest can be invested in services that directly benefit citizens. Lower government borrowing costs often lead to lower interest rates for everyone, on loans, cars, and homes. This makes it easier for families to invest in their futures. Most importantly, the upgrade boosts confidence, attracting investment and creating jobs. More jobs mean less poverty and inequality. For millions of unemployed South Africans, this is a hopeful sign. The upgrade isn't the final destination, but it's a crucial step toward a more prosperous future. It's a signpost on the road to shared growth and opportunity. This upgrade is a moment to celebrate and a call to action. It's a recognition of the hard work, determination, and resilience shown by South Africans from all walks of life. But it's also a reminder that progress is not a destination, but a journey that must continue. The reforms that led here must be deepened and expanded to sustain progress. Policy consistency, transparent governance, and a commitment to long-term growth are more important than ever. Every step forward builds confidence, both at home and abroad. The path to full investment-grade status is clearer, but it requires continued discipline and political will. Staying the course means making tough decisions, even when the benefits aren't immediately visible. It's about building trust and credibility over time. Fixing state-owned enterprises and creating a business-friendly environment are essential. Modernizing infrastructure, improving service delivery, and supporting entrepreneurship will unlock new opportunities for growth and innovation. High unemployment and inequality remain challenges, but a stable, growing economy is the solution. By investing in education, skills development, and inclusive policies, South Africa can ensure that prosperity is shared by all its people. This turnaround is the result of collaboration across society, from government to business to ordinary citizens. It's proof that when people unite behind a common vision, real change is possible. It proves that with a shared goal and clear plan, even tough obstacles can be overcome. The journey ahead will require the same spirit of unity, determination, and hope. The S&P upgrade is external validation of South Africa's hard work and resilience. It signals to the world that the country is on the right track, and that its people are ready to seize new opportunities. It opens the door to more investment, jobs, and a better quality of life. With renewed confidence, South Africa can attract the resources needed to build a more dynamic and inclusive economy. Now, the task is to build on this foundation for a brighter, more equitable future. The momentum is here. Let's use it to create lasting change for generations to come.